Hey everyone, we're back with another episode of Real Talks. Now, Real Talks is the series that we produce to tell you exactly what's happening in the market, up to date, live, and informative, both in the real estate and mortgage world.
And what's actually happening.
Now, this is probably one of the most interesting ones that we've shot so far.
Well, yeah.
For the last 2 years, we've been talking about increases, payment increases, rate increases, price decreases. Now, in the last few, we talked about rate pauses, a little bit of change and positivity in the real estate market, perhaps.
Yeah, a little bit.
And sort of the talk of incoming rate cuts.
And they're here.
They're here. Bank of Canada announcement, first cut that we've seen in how long, Peggy?
4 years.
4 years. Can you believe that?
No.
You texted me this morning.
No.
I couldn't actually believe it when I heard it as well.
4 years.
I mean, we are like very in touch with this stuff. You and I text 100 times a day.
Where did the 4 years go?
Where did the 4 years go? Like when you said this is the first cut in 4 years, I thought to myself, 4 years.
I know. I had to do the math. I was counting on my fingers.
Just wild. And here's what's even crazier about it as well is like you and I were talking before we started live here, and we were saying, okay, was that 2 years ago that it was the first 1% increase? Yep. And we kind of looked at each other like, last year or 2 years ago? No, it was 2 years ago.
2 years ago.
So, thinking back to the start of low interest rates, cuts, pre-pandemic, or I guess start of pandemic times, we had a 2.45% prime. Sounds crazy to even say it. Prime has increased all the way up to 7.2%.
That's insane.
So let's just pause on that for a sec, because you heard me talk about this last time. When there was a hold, there was a lot of media, lots of social media. People that are watching this, you'll be connected to someone somewhere on Facebook, Instagram, somewhere that'll say overnight lending rate was cut to 4.75%. But it's cloudy for the consumer because that's the overnight lending rate, and it was cut. It's true, but prime lending rate is what people borrow based on.
Exactly.
And prime lending rate is still 7%. I mean, it was 7.2. It's going to be 6.95, and it's still incredibly high.
It is. And the one thing I can honestly tell you is if they would have told us back in the day when they started raising interest rates that we would have this many hikes and not crash this market, I wouldn't have believed you. I would not have believed that this housing market could absorb that many increases. Yeah. And yet it did.
And we're talking about it every day. Like, I mean, the townhouse that may have been, let's talk like South Barrie, new, pretty, new construction. Those townhouses touched 800,000, I would think, right?
If not more.
They went all the way down to probably $600,000, I'm going to say, ish, maybe a little bit more.
Yep.
They're not back to 7.
No.
Right?
No.
They're not back to 7. But what's crazy to your point is that they didn't go to 5 or 4.
They did not. And it's incredible. And we did feel the decreases when they first happened.
Yeah.
When 2022 came around and the rates started going up, this market did drop 35%. No question about that. So, I mean, we went up the fastest, so we came down the most, which was fine. We have probably come up 15 to 20%. So we're still shy. We're still shy.
Yeah.
But guys, it could have been a lot worse.
Totally.
We really dodged a bullet.
And there's pockets that were hit harder.
For sure.
So we were talking about months of inventory. So before I dive into that, just tell me really quickly for those that are watching, explain months of inventory to me.
Okay. So months of inventory means if no more houses were listed today, how long would it take all the ones to sell that are on the market? Okay. So that's how we get our months
full
of inventory.
Full sell-through, basically.
Yeah.
Okay. So Barrie.
2.9.
2.9 months of inventory. Low.
Very low.
Aurelia.
3
5 and change?
No, it's almost touching 4, but not quite.
So that's low as well.
Yep.
Talk about the high ones.
Tiny.
Tay.
Romera. 11 months.
11 months of inventory.
In tiny.
Yeah, we looked at that.
Months.
Yeah. So that means if not another house was sold,
it would still take almost a year to get rid of everything that's on the market.
Yeah. Gotcha.
Which is a lot.
So what's the missing piece there? Is it price? Is it demand?
A lot of the problems in tiny arose when they started skewing the rules with the Airbnbs, because a lot of people were
rentals and that sort of thing.
Airbnb-ing those properties, and they no longer can. So as as somebody who owns a property there and you're now your source of income is gone, you're going to try and get rid of the property.
Yeah.
And that was when we ran into trouble.
And that's, that
and
contributes.
We've never recovered that. We've never recovered from that.
Yeah. And markets like Angus that always have lots of demand have low months of inventory.
Very low.
Because the houses sell fast and there's not a lot for sale, for example.
And when you're buying real estate, I always say to people, it's like a stock. When you're trying to buy real estate, it's no different than a stock. What you're looking for is liquidity.
Yeah.
And how fast, if I had to, can I sell it?
That's a good point.
If you're in Collingwood, because a lot of people are like, oh, I love Collingwood. I love the market in Collingwood. 8 months of inventory. I don't love that. I love Barrie. 3 months of inventory, 2.9. Yeah. That means I can sell my house if I need to.
Yeah.
So it's no different than any stock out there.
Yeah.
The faster I can sell that, if I had to, the faster I can unload that property, the better. The more attractive to me.
Yeah, totally.
The more attractive to me.
Yeah. And what I explain to my clients is like, it starts with, think of a fire, right? It burns from the center out, right? So when a hot housing market emerges, everything in Barrie sells through.
Yep.
You can't find a house. And it starts with pockets.
And it's going to happen again.
Totally.
And that's why I was talking to my agents yesterday and I said, I honestly didn't think the Bank of Canada was going to drop this month. I thought they would wait it out till July or September. They did. And that's amazing. I happy to be wrong. Guys, I'm going on record saying I was wrong.
Okay.
And I am so happy I was wrong. But the reality of it is that we don't have the inventory. We don't have the amount of homes necessary to house all the people in this country. And so once the rates start falling, and as they did today, you're going to get a few more buyers trickle in. Yeah. They drop again, a few more buyers trickle in. So there's nowhere to go but up in this market.
And because a little bit of a rate decrease equals one very important thing.
Yeah, consumer confidence. That's all that matters. If the consumers feel good, they will buy.
That's right.
That's it.
That's it. And consumer confidence is in the air.
Yep.
We were already feeling it. Like,
it's not tangible though. It really doesn't make sense because it's not like dollars and cents or math that I can write down and say this is, if you move this here and you get that there. Yeah. It's not tangible. It's a feeling.
We talk to clients every day, Peggy, and the conversation goes like this. I'm going to sell and I'm going to buy, but I'm going to wait for rates to come down.
Yep.
And we say, but you have a fixed rate. You're porting your mortgage to the new property, meaning you're carrying your rate over.
What are you waiting for?
What are you waiting for?
What are you waiting for?
The rate cuts
They're waiting to feel better about this market.
They're waiting for consumer confidence. Now, 100%. Consumer confidence could be higher price on the home that they're selling. It could be gut instinct. It could just be that other finances are affected in 100%. Their life.
It could be that I'm not spending that extra $100 at the grocery store.
Totally. And it could also mean that consumer confidence in the general economy means that they feel more job security. Maybe they're in a trade.
100%.
Maybe they work for a home builder.
100%. Job security is everything.
Totally. So when we're talking about the rate cut, we're talking about a 1/4 point. Okay. If you have a variable rate, adjustable rate, or home equity line of credit, this will affect you.
Yeah.
Let's start with the adjustable rate. Okay. These are the mortgages that people have hated having for the last 2 or 3 years. They started at somewhere around 1.5%. They're currently around 6%. And every time the Bank of Canada cranked interest rates up, their payment went up. These are the folks that we heard from that wanted the best rate to start and felt like that was the best option for one reason or another. But these are also the folks that are calling us saying, where do I get the extra money for the increase in payment? Okay. When those folks feel the decrease, they'll feel it to the tune of about $20 a month for every $100,000 borrowed.
But they'll feel it immediately.
They'll feel it immediately. And we were talking about this. I saw a post on X this morning and it said, hey, if someone told me that my groceries were going to be $100 a month less this month, I'd be jumping for joy.
Yeah.
So adjustable rate consumers, if you have an adjustable rate, your payment will go down. If you have a $500,000 mortgage, expect a decrease of about $100 a month. It's great. It's just the start of it too.
It is just the start. And that's really what the momentum that people are hoping. And, when pressed this morning, the Bank of Canada governor said, enjoy the moment. He didn't want to elaborate any further than that. And he said he was going to take it meeting by meeting. And I mean, that is a sensible thing to do. You have no option but to take it meeting for meeting. They've cut now. They're going to see how it goes, see what it affects, because their number one scary thing that they can't control is losing control of the housing market.
Yeah. So everybody kept on pressing Tiff on when are we going to see more decreases? Yep. Where are we going to land? Yep. What is the target rate? And he said the same thing over and over and over again. We will adjust rates accordingly to stay focused on our sole mandate, which is
2% inflation.
That's it.
Yep.
Not 2% interest rates, 2% inflation, period.
When that happens, at that point, things will be better.
Yeah.
And they need to lock that in too. It can't just be 2% for 1 month.
No,
it's got to be sustainable.
Yeah, and what's interesting about that, and you've heard us say it before, the Bank of Canada has also made it very clear they don't care about your home value.
No,
and they don't care about your mortgage payment or your interest rate. They do not. I mean, there is a correlation. There is. They're not the government. They're not up for re-election. They're not worried about that. No. They have to keep that degree of separation where, Ford and Justin Trudeau are mainly focused on housing market because they need to get re-elected. Yeah.
That is not the mandate of the Bank of Canada.
No.
Sole
mandate is inflation.
But don't think they live in a bubble either. They know that housing prices add to inflation, and that's the last thing they want to do.
And they're, think of it like a police system, right? Inflation's up, rates go up. They pull on that pulley, right? Like one goes one direction and the rates go the other to keep that inflation in check.
Exactly.
So, Tiff has said, hey, listen, when we get inflation to target and rates decrease, this housing market could take off, and that's no longer our responsibility.
No.
So we've said it before that it will be a Minister of Finance thing to create housing policy. It could be a government thing to create housing policy. We've seen foreign buyers bans. We've seen anti-flipping tax.
100%.
We've seen the stress test. We've seen a whole host of things that have come in to help stifle demand and make it more difficult for borrowers to qualify.
And again, the big elephant in the room is supply. And they still haven't got that down. They've tried. They are trying. And until there's enough supply, to house every person in this country, you're still you're gonna feel the pressure of house prices.
You will. And the average home price is still, the average home in Simcoe County is still generally unaffordable because prices went down.
They did.
With interest rates going up.
Yep.
Interest rates have come down a little bit. I mean, a first-time home buyer can get a 5-year fixed rate below 5% right now.
Sure. Amazing.
That's great. But we talked about this. $600,000 townhome for a first-time home buyer with a minimum down payment. You'll need about $40,000. I was at one of your team meetings and I polled the whole crowd and I said, how much do you think the monthly payment is for that first-time home buyer buying a $600,000 home? And they all threw their hands up in there and they said, too much. $4,000 a month.
Yeah.
$4,000 a month is what it costs.
That's unacceptable. Yeah. And it used to be $5,000.
Yeah. And
at least it's $4,000 now, but it's still unacceptable.
Yeah, it totally is. And what was interesting is everybody raised their hand and they were all within $500, $3,600, $3,700, $3,800, right? And if I would have done that 2 years ago, or certainly with a group of consumers, they would have said $2,500 a month, $2,600 a month. It's set in now. People know now, right? Especially, people that are working in the industry as well. The cost of ownership is higher than the cost of rent.
Yeah. And that was never the case in the last 20 years. Yeah. It was always cheaper to buy than to rent, which kept this housing market fueled by first-time buyers. That is no longer the case, which is why we are not going to see February 2022.
Yeah.
The prices going out of control. Like there's just no way we're going to see that. Not in the next little while.
But what's interesting is, and we've talked about this before as well, South Barrie detached home, nice, pretty, really well renovated, or in a newer area. 2021, for example, $1.25 million. Same house today, $900,000. Significantly different. But Canadian consumers, borrowers, buyers would buy the house at $1.25 million
with a lower
with
rate.
a lower interest rate.
And so it was always about the rate because it's about the payment.
Yeah. Now roll forward to today. Buy the house at $900,000. Get an interest rate of say 5% versus 2.5%. Double. Payments almost the same. But what's missing is the consumer confidence.
Yep.
That's what's missing. You know, somebody felt good about buying in a hot market. Other people were doing it. People felt good about a really good interest rate because they knew 2.5% was really good.
Oh, absolutely.
So what are you finding in the market right now? Like who's buying in your world right now? And I'll tell you a little bit about who's borrowing in our world after that.
So we're still hitting our heads at the $1 million mark because, as everyone knows, CMHC does not insure mortgages over $1 million. So if you don't have 20% down, you have to buy something that's 9,999 and less.
Yeah.
So that hasn't changed. We've been hitting our heads with that for the last couple of years. That hasn't changed. We have seen some movement on that price point, but generally 999 is top.
It's a big ceiling.
Yeah. And when you were in 2020, early 2022, when the 2,200 square foot first view was selling for 1.2, you know, it was palatable at 2%. It's no longer palatable. You can't do it. So
no, it's not.
That's been our problem. And, you know, we were busier and our clients were getting more showings December when I was urging people to list their homes. And I said, I know I sound crazy. I know your Christmas tree's up, but I'm telling you, this is the time. Yeah. And it was better than what we've seen for March, April, and May. Very quiet markets, very quiet.
But do you think that's because people were waiting on bated breath?
They were waiting
for this first announcement?
Well, they were waiting. And I mean, the consumer confidence wasn't there. You see stores closing every day. I mean, it doesn't leave you feeling, you know, giddy about the housing market.
No, it doesn't. It doesn't. And, you know, what's interesting in our world is we're still seeing people buy. Yeah. But people are making concessions about what they buy.
You have to.
So, you know, I send someone out looking for a $600,000 townhouse, for example. They find one. I run the numbers. It's $4,000 a month, just a little less, but you know what taxes, right? Yep. And they think to themselves, that just doesn't make sense.
It doesn't. When I can rent it for $25,
right?
I will rent it.
Yep.
And I urge people to do that.
Right.
Like you don't buy a house just because. You buy a house because it makes sense in your life.
Yep.
I mean, at some point you need to get into this housing market because you just need to.
Totally.
But if the difference between buying and selling is $1,500 a month, that's insane.
Right. And you know, in that mortgage equation that I just explained, that $600,000 townhome, you're not paying $1,000 a month to principal.
No.
So even if it costs
that's the other problem.
Right.
Because back when we were getting 2% rates, most of that payment was to your principal. It wasn't to the bank's interest.
2/3 to principal, 1/3 interest.
And now we're probably exactly opposite.
Almost exactly opposite. Yeah. Almost exactly opposite.
That is a problem because you're not building equity fast enough.
You know, with the exception of the fact that if the housing market continues its current trajectory and we regain some equity, that people entering into the housing market can make some money.
For sure.
I mean, I don't think it changed really. Like if you had a 2% interest rate and you're paying a lot to principal, let's isolate 3 years. Somebody that had a 1.5 to 2.5% interest rate through the height of the market, okay, 2020 to 2022, they made way more in appreciation than they could ever make in principal pay down.
Absolutely.
And even with interest rates the way they are right now, not a lot being applied to principal, somebody will still make way more in appreciation.
And that's the thing. If you bought today, even with these rates and you could afford the payment, you're still going to make money. You are still going to see an increase in your purchase price. It's not going to be 50% a year. It's not going to be 20% a year. It might be 5%, but hell, like that's still 5% year over year. That's money.
So you're going to hate me for putting you on the spot on this. Okay. So, first time home buyer buys a $600,000 South End townhome today. 5 years from now, what's it worth?
5 years from now, probably 8.
So 7 is a really safe bet.
Yeah.
Okay, well, here's my point. They are not going to pay down $100,000 on their mortgage in 5 years.
No.
It's just not possible.
No. So you are
$45,000
banking on the fact that these properties are going to increase in value. Where we got into trouble was when the average townhome was going for 9
Yeah.
and $1 million. We're not Milton.
Yeah.
We're not close enough to Toronto to be able to substantiate. People do not move to Simcoe County to live on 30-foot lots.
No.
And they don't move to Simcoe County to buy $1 million townhomes.
Well, we were talking about that in relation to months of inventory in Springwater. Springwater is a great area.
Springwater was hit hard.
Yeah.
But they also saw a lot of increase when times were great.
Yeah.
Those 3-car garage bungalows were going for really big dollars.
But they also had a lot of new construction. Like that, we talk about that like urban sprawl.
Yeah.
You know, it's just outside of Barrie. They had Midhurst Station. They had Stone Manor Woods. They had even some new development in Midhurst. And we're probably even missing one on top of that. That was a lot of new homes.
And Stone Manor is a perfect example because when it was first built and people were buying there, you know, I was kind of like, oh, that's a lot of money. You know, that was a lot of money. And then the boom happened and you couldn't even get a house there because you couldn't get one. They were going for crazy dollars.
We went through that sales office. You could buy a 3,000 square foot home when they first launched at $600,000.
Yep. And then, you know, the decreases started happening and they were hit the hardest because they went up the fastest. Mm-hmm. And now we're starting to see things move at a reasonable amount of money. Like, you know, if you think you're going to get $2 million in Stone Manor, you're not going to get it.
No.
You know, but are you going to get 1.3, 1.4, like on a bigger home with a decent lot? 100% you will.
Will you get 1.5, 1.6, or is that sort of the breaking point in that subdivision?
Nah, and then again,
it's tough, right?
It's tough.
Yeah, yeah, and you know, going back to the new, you know, proposed government initiative, August 1st, 30-year amortization for first-time home buyers with less than 20% down on new construction homes. So tell me where the new construction is. It's in Barrie, condo, stacked townhomes. Yeah. I mean, you have young adults as children. Do any of your young adult children want those homes? Small condos, back-to-back townhomes? No. No chance. No. And likewise, if they go to that urban sprawl, Midhurst Station, some of the nice subdivisions that are happening outside of Barrie, you can't buy a home for $1 million there.
No, you can't.
They're probably $1 million and just a little bit to start. Maybe $1.03 million, $1.05 million, $1.80 But they have to be under $1 million.
They have to be under $1 million to qualify for CMHC.
And for that program.
Not $1 more.
Right. So we've talked about the fact that new construction homes are more expensive than resale homes. Yeah, they are. In most cases, right?
They are.
So
because resale homes adjust to the market.
Yeah.
Where new homes are fixed costs. Like this is what it costs to buy this home because it cost me this much to build it. With resale, it's a little different. We adjust. We're up and down. Yeah. Supply and demand.
And new homes are also commodity driven.
They are.
Think about employment, how that affects new home builds. Commodities like wood and concrete and that sort of thing. You know?
Absolutely.
And that's all going to dictate the price of those new homes.
Yep.
How many times have we talked about houses? You and I have talked about it a million times. I was talking to one of your agents actually just last week. Beautiful home in Midhurst. And we said the same thing. You can't build that home for the money they're asking.
No.
Nice, beautiful home in Midhurst. You know the one I'm talking about. Has a pool, has a courtyard.
Yeah.
You can't, there's not a chance you could build that home for the same money today.
But again, resale adjusts to the market.
Yeah. So for first-time homebuyers with this new proposal, 30-year amortization for new construction, okay? First-time homebuyers, 30-year amortization. You can afford 6 to 8% more home.
Yep.
Well, if the new home is 6 to 8% more expensive than the resale, what does it matter?
You're kind of euchred.
And then back to your point, you know, I still also think that even, you know, a younger demographic, people that are just getting into the housing market, they don't want those homes.
They don't.
I hear the term stacked townhouse.
I know.
Back-to-back townhouse.
I know.
Micro condo.
And again, it's all about the mentality of Simcoe County, right?
Yes.
Like when people move this far up north, they expect, they don't care how big it is, but they want a detached with a yard. That's what they're looking for. They are not looking for stacked townhouses. That's a Toronto thing.
Totally. And, you know, so one of our mortgage wellness offices is in a condo building, right? We're on the main floor. There's condos upstairs. And I think to myself, when a developer builds that sort of building, they want to create a sense of community. They're thinking, what do our residents want in this building? And how can we, gather community? There's courtyards, there's party rooms, that sort of thing. Well, in that building, I think I was told that like 70, maybe more, 70 to 80% of it is rental units.
Yeah.
There's no community.
No.
People who are looking for a really nice rental, that's a great spot.
Maybe they're
new
an
to
incredible
Barrie.
spot.
Maybe they sold their home and they just want to rent. It's a great spot.
And that's if I can urge people, the one thing I wish more than anything we could take the stigma away from renting.
Oh yeah.
Like it's not, it doesn't matter if you own or buy. It's about the price of the payment. Yeah. And if that's what you can afford, rent. There's lots of great rental options out there.
I had a conversation with someone who sold a home. They're renting currently. Okay. They have $600,000 in the bank. They're retired. And they can't get over the stigma.
No.
They don't like renting.
Nick, I did a commercial on CTV News back in, I believe it was January of 2022 when prices were stupid.
Yeah.
And I was speaking directly to people that were retired.
Yeah.
And I said, if you are retired and you no longer need this big house, please, there is no stigma in renting. Take out your equity. And I got accused of ageism. And it's like, I am not discriminating. All I'm trying to say is get your money out. I knew there was a fall coming. Like they needed to get out back then.
An older demographic traditionally has a hard time getting their head around renting.
There is nothing wrong with renting.
No,
and in fact, most of the time your neighbors have no idea whether you rent or own that house.
Yeah.
You're occupying it and you have as many rights as a homeowner.
That's right.
If not more.
That's right. So these clients that I spoke to, $600,000 in the bank, currently renting. They can't get over the fact that they're renting. There's a stigma, right? And, they said, we're looking at buying now. What can we qualify for? And what I reminded them was this, $600,000. In most cases, the market, just the stock market is very good. I mean, heck, you could probably invest in Enbridge and draw a 6 or 7% dividend.
Yep.
So let's say it's 6 on $600,000. That's $36,000 a year in return on their cash that's just sitting in the bank.
Yeah.
It's $3,000 a month. How much do you think the rent is? Less than $3,000 a month.
Less.
They could completely eliminate their rent, live a beautiful life. They're both on pensions. One has an employer pension as well, government pension.
But they won't. Because there's a stigma around rentals, and that has to disappear.
Yeah. I would love to see more of the aging demographic. I won't say seniors because sometimes it's younger than that.
Yeah.
But the aging demographic sell their home, cash in, and rent. You can rent a home for less than you can own it for.
And what do you need that big house for anyway? Mm-hmm. You don't need it. Get rid of it.
Okay, so if this resonates with somebody, when do they wait? When do they sell? Not now.
If you're going to sell to rent?
Sell to rent.
Probably not for a few more months.
Yep. That's what I would say too.
You need a couple more interest rate cuts under your belt.
Or maybe it's spring 2025.
It could be.
CMHC issued a report. We talked about it once before. And it said that their prediction, keep in mind, they're a government, they're a government entity.
Yeah.
They're typically designed to be pretty darn conservative.
Yeah.
And their prediction was that home prices will return to peak pandemic levels by mid to late 2025.
And
you think that's optimistic?
I think they're dumb.
And that's okay.
I've always thought that CMHC is dumb. They always put out the weirdest kind of stuff, like when they wanted to stop the 5%. They stopped
dumb.
That, right?
5% down payment. It's graduated now.
Oh, okay.
So it's 5% down on the first 500,000, 10% down on the difference.
All right.
I ran this scenario for somebody just last night because it's difficult to explain to a consumer. $600,000 townhouse. Formally, 5% down would have been $30,000. Now it's 5% down on the first 500. That's 25,000. And then 10% down on the next 100,000.
Okay.
So it's 35,000 instead of 30. Ooh,
okay.
I mean, I guess they thought that's going to help,
It's so silly.
Stifle demand.
So silly.
But the closer you get to $1 million, the more effect it has, right?
Of course. Yeah. And I totally agree that prices will go up in the next little while. The reason I don't agree with their forecast is that we've lost a huge segment of buyers, and they're never coming back. Not for a long time.
And who are those folks?
The investors.
Yeah.
They're out. They're out at these prices. They're out at these rates. Period. End of story. And they were a lot of the people that were buying in the spring of 2022.
So we do a lot of mortgages for real estate investors, a ton. I love investing in real estate, and you do too.
Of course.
So we talk about it a lot. Okay. I don't think there's ever an investor that doesn't regret selling a rental property. Can you think of one that you regret selling? That you don't regret selling?
No. Right. My only regrets in real estate are the things I sold, not
Totally.
what I bought.
Totally. I think about some of your holdings, your former office, the duplex, triplex.
Should have kept it all. Should have kept it
Totally.
all.
Right. But getting into a new rental is very difficult, right?
And most of the time it's because they're using their home line of equity to get the down payment.
Precisely.
Which is a big kick in the teeth right now.
So I follow a lot of these communities, the real estate investment communities, podcasts, YouTube episodes. I mean, it's literally all I listen to, right? All of those audiences are moving to the United States for investment.
I know. That's where they're investing their money.
I listened to one yesterday about an investor who is investing in Ohio, and he can't mortgage the properties in Ohio. Can you guess why?
Yeah.
Is it because he's a Canadian?
Yeah.
Is it because he has bad credit? No. You know why he can't mortgage the homes in Ohio?
Why?
Because he's buying them for under $100,000 a piece, and it doesn't fall within the minimum loan amount that most banks lend to.
Wow.
So he's buying homes in Ohio for $75,000 to $100,000 that rent for $700 or $800 a month.
That's insane.
It's crazy.
Yeah, I know.
So now, an investor in Canada, let's say they had $100,000 to invest. That's 20% down on $500,000. So what are they going to buy? Well, they're going to go and buy a townhouse, 20% down in Midland or somewhere where you can buy it for $500,000. Okay, townhouse.
Not Barrie,
right? Now, once they pay their mortgage, pay the taxes, pay the insurance,
they're still having to put money in.
You have to put the money in and pay the interest on your home.
That's why I'm saying to you, that segment of the market, it's going to be a really long time.
There's other places they can invest and make great money.
And it isn't Simcoe County.
If you took $100,000 and just, again, bought Enbridge stock with it, you'd make more than if you bought a rental property.
Go to Edmonton.
Yes.
You can buy really good real estate in Edmonton, and the rents are great.
Right. So Simcoe County specifically, what we're seeing with buyers is, and it's a lot of what you're seeing as well, is these buyers, they make decisions that affect their affordability. So if they were looking for the $600,000 townhouse in Barrie, they'll go to Midland and buy it for $500,000, or they'll buy a duplex in Barrie for $700,000, where they get $2,000 a month in rent.
I would buy a duplex all day long, just for the record. That's what I would be doing.
I was going to come on here and tell you that the only thing that I would be buying right now, if I was getting into the market,
is a duplex. 100%.
They're underpriced.
Yep.
They're wildly available right now.
And they've seen the same decrease that single family residentials have.
Yeah.
And it's insane because the amount that you're going to take in is so much more. You've got 2 properties you're going to be getting rent on.
You guys have a listing that we've done a feature on a few times. We've run numbers on. Still for sale. It's beautiful. It has an existing tenant. It's like $725,000. And if somebody buys that with a minimum down payment, they rent out the basement, they live upstairs. We ran the numbers. It was like $2,200, $2,300 a month.
Or rent or live in the basement and rent the upstairs.
Precisely.
And you can live there for free.
Right. So you'd live there for less.
That's what all my kids did.
In the teens. You'd live there in the teens.
Yeah.
17, 18, 1900 or something like that.
That is free.
It's brilliant.
In this day and age. It's free.
Yeah. So that's what I would be buying.
Yep.
Now, when the market starts to sizzle, the good stuff will start to sell.
Yes.
Well-priced single-family homes.
Yeah.
Those like the skinny ones that you see, 2-story, little octagon window by the front door, single car garage. Those are like, I don't know, are they 700,000 right now? Probably.
Maybe a little less.
Yeah. They will go up.
Yeah, of course.
The duplexes at $700,000 that generate $25,000 a year in rental income, they will go up.
Of course they will.
Now, the $1 million.
Not on the same scale.
No. But you know what will go up slower? Townhouses, because they're costly right now. Condos. They're costly right now.
They are.
The houses that are touching $1 million, like, unless you're selling a home and getting into that home with equity,
you can't live there.
We run the numbers.
You can't afford to live there.
We run the numbers. It's $5,000, $6,000, $7,000 a month. Come on, right?
No, thank you. Not to put a roof over my head.
No.
No.
We get a lot of calls. I'd like to move to Friday Harbor. And that's good. Some of those prices are
They're
good.
the lowest I've seen in Friday Harbor for a really long time.
So I also think that Friday Harbor is poised to go up a lot.
Yeah, because they have suffered for a really long time.
Through tourism, hospitality, and the
long
pandemic
time.
and everything else, right?
Long time.
Yeah. So we're telling people to buy duplexes. Anything else that you can see as an opportunity in this market right now?
There's a lot of condos in a lot of pain right now, too. The condo market has really suffered throughout this. So there are deals in condos right now, Friday Harbor being one of them. But there's lots of condos that have opportunity and duplexes. That's where I'd be looking because it makes no sense to buy a single family home that's going to cost you more to keep going than you could rent it for.
If someone's looking to sell and buy, is this the market to do that?
100%.
I knew you were going to
like
say
now.
Because
don't wait, because the problem is once you wait, and then I can't promise you that you're going to be able to buy the house you want to buy. And at least now you can take your time. You can really figure out if this is the house I want to be in. I'm
gonna tell you as well, the other market that you need to buy in if you're looking to buy right now is cottages.
Yes. The cottage country was hit hard.
Hit very hard.
But most people buy their cottages from their home line of equity. Again, those are the people that got hit the hardest.
And you saw all the articles about how cottage country was getting hit and people were going to sell their cottages and they couldn't afford them and they bought the COVID cottages. And then what happened? Lots of cottages came available, which means that the true cottage buyers can pick up the good stuff.
Absolutely.
Because they have time to look around,
Absolutely.
Right? Home inspections, financing conditions.
They're all back. What's old is new again.
That's it. So we have a cottage, and we saw a lot of people buy cottages around us, friends that came to the area. And, one of the most common things that was overlooked, a boat slip at a marina. I mean, we're on an island.
Right.
People were buying cottages.
Without boat slips.
With no consideration for
how they're going to get there.
Right. Because they had to act so fast on buying the cottage, they're going to miss out. That you overlook things like home inspections, septic inspections,
100%.
Plumbing inspections, financing conditions. Right now in the cottage country market, there's a lot of inventory. You can shop around and not really make any, excuses about where you're going to buy. Oh, it'll be okay. We didn't need a beach. We're okay without a beach. But now you can look around. Now you can pick it out. Now you can
100%.
find the perfect spot.
100%.
And I bet you this time next year we'll be sitting here. That cottage market will be heating up again.
Yep. We won't be having the same conversation.
No, you won't be able to get a home inspection. No. You won't be able to look around for financing after you buy or before you buy. It's going to be like, hurry up, quick. I bought a cottage. What can I do?
Agreed.
And that's a really dangerous spot to be at with cottages.
Or home buying alone.
Home buying alone.
Yeah.
Firm purchase on a condo building. Every single bank in the country is going to want a status certificate on the condo.
But you had no time to get one.
You had no time. And
you
a status
had to go in blind.
The financials on the condo corporation, the history, any structural defects, any issues.
Yeah. That's why I say if you're going to buy now. Mm-hmm. Buy now while you still have time to look around, to make sure it's the right home. And that's...
So here's the thing. Here's the takeaways for people, okay? Bank of Canada cut interest rates by quarter point today. It will affect a borrower's payment if they have a mortgage that's affected by this sort of thing in a very small way, but it's a little bit. Again, if I told you your groceries were going to be less this month, you'd be really happy. If you have an adjustable rate, a variable rate, a home equity line of credit, you will see a little bit of relief. There's likely more relief to come as well.
Yep.
And most importantly, there's going to be some consumer confidence in the air as well. People feel more comfortable about the general economy. And in terms of real estate and real estate values,
we're good.
You'll see positive changes.
We're good.
You'll see positive changes. People will buy. Home prices could go up. Those months of inventory will start to come down to reasonable levels, I think, in the really high ones. Because people will buy the good stuff.
They do.
They feel more comfortable about the market. They have more consumer confidence. They may just buy a home.
Yep.
As always, reach out with any questions. Peggy at peggyhill.com. Nick at mortgagewellness.ca.